Let's turn our focus now to the markets on this day. Michael Treherne will be joining us for an in-depth conversation on that. But perhaps as we recap, the emerging market stocks have jumped by 1.4% so far today. And this is following a record close on Wall Street overnight. Although weak data from China fed caution about slowing economic growth, currencies of the developing world, on the other end, have extended gains to a third straight session as the dollar remained pressured by the U.S. Federal Reserve's dovish stance. Michael Treherne, who is portfolio manager at Vestact, joins us now to dissect the latest business stories. Michael Treherne, good to have you with us again. Perhaps let's start with you taking us through the markets and how they opened this morning.
Afternoon, Tommy. Yes, JSE all-share up 0.58% as I look at it, being driven well by the likes of Naspers and Process. This is on the news, or it's a rebound on Tencent, their biggest investment in China, and on the news that Process is increasing their stake in Delivery Hero, which is a European delivery company similar to Uber Eats. The resource sector at the moment is struggling. The resources 10 index is down 1.4%, and that's over concerns about Asian growth as the Delta variant still isn't quite under control in that part of the world.
If we look at private sector growth credit in South Africa, that grew by 0.61% in July compared to a year earlier, while the broadly defined M3 measure of money supply grew by 1.93% in July. Talk us through that data.
Yeah, so those are two stats that aren't followed too closely. It's worth noting that the growth in credits and the growth in money supply was higher than expected. And that generally means that the economy is faring better than people were expecting. At a loose relationship, more money that you have in the economy generally means a growing economy, particularly in our case where there isn't much inflation at the moment. Those numbers would be worrying if there was a lot of inflation around, but because we don't have much inflation, increased money supply generally leads to increased GDP growth.
Now, Old Mutual was expected to report a return to profit after tax in its 6 months to end June, bouncing back from a rather tough first half of 2020. How did the group end up doing?
Yeah, these numbers are very, very tough to compare. As you note, last year was all over the place, so to compare like for like is almost impossible. The number that you really want to look at is what are management doing with their profits. And in the case of Old Mutual, they're paying a dividend, and that's what you want to see. It shows confidence from management. It shows that things have rebounded. And in Old Mutual's case, it's a nice-looking dividend. They say that they've paid over 10 billion rand in life insurance claims over the last year, so it shows you how heavily COVID has hit the business. So that their life insurance business is still under pressure, but their investment business is doing very, very well, driven by record highs globally. So when the market's doing very well, the fees that they charge do very well as well. So yeah, tough times on life insurance, but good times on the investment side.
Now, Vestact, they've released their interim results for the 6 months ended 30th of June 2021 and have declared dividend. Tell us more about that.
Yeah, so as you point out, they've declared a dividend, which they did last year, so already that's a positive result. Market liking the results this morning, showing that the stock price is up 3% on these results, showing how happy the market is with them. Management reported that both schools and their tertiary divisions did okay, showing very slight revenue growth. It is worth noting that both those revenue growth is below inflation, so theoretically they're going backwards. But they're saying it's very difficult to increase fees, given that a lot of people are working and studying from home, and there's a very big pushback to any fee increases that they're seeing come through. Management is still confident about the future, and they're investing where they feel is appropriate to see good growth going forward. And they're seeing pretty good traction with their online learning. So definitely a stock to watch for the future.
Oh, well, Michael Treherne, thank you very much for this day's market update. That's Michael Treherne, rather. He's portfolio manager at Vestact.